Hey everybody, this is Andrea Jenson from the Cash Flow CFO, and you're listening to the Cash Flow CFO Podcast, the show that explores the financial side of running a business for people who want to maximize profitability and scale with confidence. If you want to make smart financial decisions based on data and put more of your hard-earned profits into your pocket, this is the podcast for you. This episode of the Cash Flow CFO podcast is brought to you by the Cash Flow CFO. Did you know that on average, business owners have up to 84% of their personal net worth tied up in their business? Our virtual CPAs and CFOs, as well as accounting and bookkeeping experts, empower business owners just like you to make big leaps that help them maximize profitability and scale with confidence. Visit thecashflowcfo.com for more information, and thank you for listening.
Owner's compensation is another piece of it that I like how you kind of laid out, because a lot of owners right now are either just taking money off the top or they're putting themselves on salary, which is really kind of, I would say, weighing down the business a little bit.
Yeah, it really depends when we talk about owner's compensation. And I think this is a great one to kind of pause and dig a little deeper into, because it is one that we see a lot of confusion around. And it really depends on when you look at the buckets and your business model. If we say your direct labor, right? If you're a business owner / operator and you're part of delivering the services that you're selling, then yes, you should be on salary. You have to be on salary for any type of owner, and each entity has its own rules. So I don't want to go into that much detail. But what I would like to say is that when you look at your business model, you as the owner, if you're delivering services, need to be part of your direct labor, which is part of your cost of goods sold bucket for the percent of your time that you are delivering those services. There's a couple reasons for this, because number one, you want to train your business. If you're going to replace yourself in that direct labor role, which should be the plan, right? We're working towards that. You've got to be training the business model to afford somebody at market rate to come in and take that role from you. So that's number one. And number two is that the whole reason we have a business is to take active income generating activities and move them to personal passive income generating activities. So I want everybody to think about that and understand, yes, we're in business because we love what we do. We love who we serve. We love the fulfillment and the reward and all of those things. But at the end of the day, this business is an asset that you need to be treating it as such. Just like you would go to the your bank and say, hey, I want a bank account that gives me a high interest rate. Why wouldn't you do the same thing for your business? And at the end of the day, we're putting kids through college. We're paying for aging parent care. We're setting ourselves up for retirement. A lot of business owners, it breaks my heart, I don't see them have retirement plans in place. And they're banking on, I'm going to sell my business and that's going to be my retirement. The reality is 80% of businesses that go up for sale don't sell because of various reasons, but don't plan on that being the case. So when you look at your owner's compensation, talk to your tax preparer, your tax strategist, say, what's the ideal, makeup of my compensation, whether it comes from, how much is in payroll, how much is in distributions or dividends, and really be strategic about it, because at the end of the day, you have an opportunity here to bet on yourself and making a lot more money on yourself running this business than you do in any other investment vehicle. And it just breaks my heart when I see people not take it seriously and look at it from that lens. It's just so much missed opportunity and cash left on the table for them personally.
Yeah, you're preaching to the choir. When I first started my business, I tell this story all the time. I'm sure people have heard it a million times. My goal was like, if I could just get to $100,000, because at the time when I started my business, I just wanted to have that multi-six-figure income, because in my mind, I was like, okay, I can take care of my bills. And I didn't know what I didn't know, that $100,000 was actually less than $30,000 net which was not enough for me to live on at the time. I ended up getting into just a number of issues, from tax issues, because again, I didn't know when I first started my business. I was like, oh, I'll just worry about it later. And so I think that's the other important takeaway from this conversation, to get people to start thinking about, the planning stage, so moving beyond like, oh, my profit margin needs to be this. But really, I like what you said, Andrea, about thinking about your business as an asset and using it as a potential tool. So there were two key things that you said that I want to unpack. One is retirement. And so can you just talk a little bit about some of the strategies that you have, implemented for your clients as it pertains to, retirement strategies? Like, what does that conversation look like?
Yeah, so there's quite a few different vehicles that you can put in, and a lot of these have a really great tax savings components in them, right? So, depending on the company size and the makeup of your team and whether you need something like competitive benefit packages, having a 401k in place, having a health savings account in place. If you don't have a big team and a 401k doesn't make sense for you, you can have a simple IRA. There's so many different vehicles that you can put into place that are going to help you, pre-tax dollars, right, as well. And your team is going to be happier too, because they're going to have a very, a rich benefits package. And I think that that's just one vehicle, right? And those are the retirement accounts, the traditional ones. But I think also just planning, like, how many years do you want to be in this business? What do you want to sell this business for at the end of those number of years? And working backwards, we're really big on, let's just reverse engineer it. Let's not take all the guesswork out of it. If you know where you're at right now, and in 5 years, you know where you want to be, what does that look like? And it's just that whole planning piece and being intentional about it and sitting down and I know a lot of businesses in the first couple of years, right? It's just, you're hanging on, you're flying by the seat of your pants, and you're making those gut decisions. Like, I think this makes sense. I feel like this does. But let me tell you, once you get to that 850,000 or $1 million, you have got to have somebody on your team that can help guide you, because you get to a point in business where you're no longer grinding and growing. You've gotten to a level in your business where it now becomes protect what you've built, and don't make stupid decisions because you don't have the right team around you to help say, hey, you don't have the right insurance coverage, or you have exposure risk over here, or, there's so many things that's where your fractional CFO is going to help you just be like, hey, I've been in this industry for 25 years. I've worked with hundreds of businesses. This is what I see. Let me help you fix it, versus being reactive when something goes wrong, because it's inevitable, right? That's how we learn and grow as business owners. But the least amount of financial impact you can have on your business, the better chances, of continuing to scale at a stable, steady, rate.
And just for the folks on the line, that some of this might sound like, well, a little out of reach, I just want to share a little bit of context. When I first started my business, again, going back to that $100,000 model, and just thinking, okay, I need certain amount. Once I started working with a professional, it just raised my awareness to two things. That number one, absolutely must put money aside for retirement. That is, in my mind, non-negotiable. So I want to just say, even if you're just starting out, maybe you're not at the $850,000 mark, maybe you're at the multi-million dollar mark. I do think retirement planning is a really important part of the strategy. And even for my team was two people, we put a 401k in with a match, which basically means that not only was I able to put money away for myself, but the company was matching it. And I cannot tell you, that was a painless exercise that has helped build up a significant retirement savings, for me and my family that would not have been there. And I used to think I couldn't afford it, by the way. I used to think I couldn't afford it. And here's something else that you should all be aware of. Corporations and government agencies love to see that you have a comprehensive benefit package in place. It basically says to them, it equates to stability. And so you can include the cost of that 401k, of those vehicles into a package that your larger clients will subsidize. And I mean that respectfully, but a lot of the business in professional service is about providing people to do certain jobs. And I remember my early days thinking, oh, I can't afford it. Not true. You can build those costs into your rates so that you are attracting best in class. Let me unpack something else that you said, Andrea. Passive income. This is the other thing that I wish I knew when I first started my business, that I should have been thinking about passive income. I certainly have it in place now, but I feel like, oh, wow, I missed such a great opportunity. Can you talk about passive income and what that looks like and what folks might want to start thinking about on this side, passive income?
Sure, absolutely. So the passive income that I'm referring to is the individual side, right? So you've taken the money, the profits, the comp package out of the business, and now you've paid taxes on it. You've done whatever you need to do based on your business entity structure. And now on the personal side, you're looking for vehicles that are going to, be putting your money to work for you without you having to actively do a lot there. So a lot of the business owners that we work with, they look at real estate, right? That's a huge one because real estate provides a lot of depreciation tax write-offs that will help reduce your active income that you're generating. So there's a lot of strategy there with real estate. We see a lot of business owners that will purchase the building that their company is operating out of, rent it back to the business. That's one way. The other way is looking at, high yield investment accounts. So, I have some clients that are S corps, and they're constantly moving big chunks of money over into these, 5 to 9% interest rate accounts, and they're just hands off. They don't have to do anything with them. So there's lots of ways that, each individual can look at what makes sense for me based on, my growth goals, my risk tolerance, and the time that your money has to work for you, because compounding is what you were referring to earlier, Jean, when you said, yes, I was only taking out small amounts, but I did it for a good amount of time. And what happens is the compounding effect of that money it's amazing. If you guys haven't looked into how much compounding over, different time frames will do for you, absolutely dig into that because there's so much power in that.
Yeah. And I think, again, for the business owners, when you start increasing your awareness to what is possible, you can start with something small. The thing that I like about personal passive income is it really does provide you with this sense of security in that, your business is not the only vehicle you're able to. I was talking to a client yesterday who has gone through this process. Again, a woman in professional services, a minority woman-owned business just like us. She was at the $1 million mark, and she was like, all right, you know what? I'm going to use this framework that we're talking about to set my goals. And she was sharing with me that over a period of 10 years, she went from $1 million business, and her government contracts totaled over the course of, she's at 50 million now. And once you get to that level, and it wasn't that difficult in the sense that, she was able to use this framework to create a staffing plan. And when she was at the entry level, she didn't have the money, but she used this framework to say, okay, if I'm going after my next contract, I'm going to need to hire a business development person. This person's going to cost X. And so as she was steadily meeting those milestones, she watched her business take off, so she really stepped into the role. And I think that's the other powerful part of this conversation, is that you step into the role of visionary, of planner. You start thinking, wow, I'm not the person that has to service all the clients. I can use this framework. I can make this happen for myself, for my family. And then leverage this personal passive income. And she was sharing that in addition to her $50 million business, she said, Jean, I had a number in my head, like we all do, like, my $100,000. Now it's like, oh, if I only had X amount of dollars in the bank. And she was like, using this framework, I got there. And she was talking about how she's creating generational wealth for her family, like her grandkids, because the investment in the real estate and some of the other vehicles has enabled her, in her case, to stop working. Okay.
Yeah, absolutely.
Um,
The other side of that too, Jean, is that when you are ready to exit your business and sell it, there's different types of trusts that you don't pay any taxes.
Start scaling with confidence today. The Cash Flow CFO is a full-service accounting and fractional CFO firm. So it goes without saying that our financial experts are phenomenal at number crunching. But more than that, they are expert communicators who will connect all those complicated financial dots in a way that just makes sense. We don't wait in the wings and check in every so often either. With our boutique approach, we position ourselves front and center, watching over every dollar that comes in and out of your business as if it was our own. So if your business is making money and you're ready to take it to the next level, but you're not sure you completely understand your numbers, and you're looking for that trusted guide to help you build a roadmap to reach your financial goals, it sounds like we would be a great fit. Visit thecashflowcfo.com and let's get started empowering you to build and scale your business the way you want to today.
Let's talk about selling, because that was my other dream. I was like, oh, okay, I'm just going to sell my business, as I get ready to retire. And I tell folks all the time, well, I'm there, I'm ready to retire. And what I learned in our meeting with you, Andrea, in March, you said, well, if you were thinking about selling your business, you should have been looking at that 5 years ago. And I was like, what? Because in my head, I was just like, oh, once I get to this revenue level, because that's what I was basing my decisions on, then I would be, a business that was attractive on the market. And I was shocked to find out that that is not the case. So can you talk to us about selling your business? What should you be thinking about?
Absolutely. I think the first thing you should be thinking about is your business doesn't sell on revenue. It sells on profit. It's going to be a multiple of your profit. And there's, two different ways to look at the profit. I won't go into those details right now, but just understand that it's a multiple of your profit that you're showing. And when you go to sell your business, I mentioned it earlier, 80% of the businesses that get listed for sale don't sell. And that's a really sad statistic, because think of all the employees, all the businesses that just close their doors. The employees lose livelihood. The customers, the clients don't get the service they had. The suppliers lose, it's so bad for the economy, every which way you look at it. And the reason that those businesses don't sell is because, number one, most of them have no plan in place. They've never looked at it and said, how am I creating value in my business? Number one. And number two, how am I reducing the risk for a potential buyer? So when we talk about reducing risk, those are things like not having 3 big customers that make up all your revenue, having a diversified customer base. What types of revenue do you have? If you have a reoccurring revenue model, your business is going to be valued much higher than somebody who has to go out and sell, deliver, and start at zero again. Looking at your team, right? How long have you had the team in place for? Is it a team-led, managed, delivered company? Or is the owner, if the owner walks away, does everything fall apart because they were the hub of everything? Looking at, some of the other components is having clean financials. When you go through due diligence, say you list your business for sale, you have a potential buyer, there's an LOI, a letter of intent, and they start doing their financial due diligence. Let me tell you, no stone will be left unturned. And if you don't have clean financial statements that take the risk out of the potential buyer taking your business over, I've seen so many deals fall out when it comes to the due diligence phase because a lot of business owners, they don't value the record keeping, whether it's financial, legal, all the things. And when somebody else comes in, they have nothing else to gauge the business on other than this historical records. And so you want to make sure that they're very clean, and you want to show the profit, right? How are you bringing in customers? How is the team delivering it? And how is it profitable? And can I replicate that without you, the owner, being involved? So those are just a few super high level things about you should be looking at when you're getting ready to exit your business. And yes, 3 to 5 years is the minimum. 3 is the minimum. 5 is you're going to get the highest value for it. And you're going to be in that 20% that actually do sell when that comes to it. And also, the other sad truth is that there's just a lack of buyers. So when you have a big marketplace and only a few buyers, that drives the price down. And so you might be able to sell your business, but you're not going to get anything, that you think it's worth. So that's really important to look at. And then the other side of that, completely, let me flip that around for you as the business owner who's looking at selling it, is there's an exercise we take our clients through to understand how much do you need to sell this business for to be able to retire on, right? So there's a lot of times we'll go through that exercise and they come up with, 2 to 10 million. And then we look at their business and do just a quick, dirty valuation. We're like, yeah, you're looking at like 500,000. That's where the 3 to 5 years comes in. Let's close that gap. Let's get it to where you can sell it for the price you need to sell it for in order to retire. And then that's where, and a lot of times people hear fractional CFOs and they go, I don't know what that costs. It sounds scary. I don't know. I will tell you, if you can take your business from a valuation of 500,000 to 2 million, and you're paying a fraction, tiny fraction of that to this finance professional, your fractional CFO, that's a huge, ROI on that investment. So.
Yeah, and it just raises your awareness to the possibilities, because I think a lot of people, are stuck. I know I was stuck, and it's really hard. Like, who do you talk to? Again, my accountant, I love them. They've done a great job for me, but they're sitting in the back seat, so I'm in the front seat. I am driving the conversation, and I have blind spots. I don't know, or I didn't know about passive income. I did not know about retirement. I was not even aware that I could dream as big as I want to, using this framework to get my business to the next level. In fact, Jenny and I were talking about this just the other day, because now, as an example, if I said, and I'm just throwing this out there, but if I said over the next 5 years, I want to get my business to $10 million, that is a conversation I can have with this fractional CFO who can help me with the strategic plan to get there, so that you're not going from 1 million to 10, you're taking steps along the way. You're evaluating that. I like the other part of that in terms of selling the company, because at the end of the day, I love my business. I love what I do. But I see myself, wanting to do something different, wanting to travel. And I want to have the option, let's just say. I'm not saying I'm selling. I'm not saying I'm not. I want to have the option. I want to be in position. And so I think for everybody on the call, that's also an option that's available to all of us to think, all right, if this is what I want to do a year from now, not a year from now, 3 to 5 years from now, 10 years, looking at those profit margins, right? And, because with the government contracts, I'm like, oh, you're at $1 million, but I've seen clients at $1 million that are generating less than $10,000 profit because their businesses are inflated with expenses. And that's the other thing that I think is just important to mention on this call, looking at your own compensation structure, looking at what you're running through the business so you can be proactive about where you really are and what you need to do to get your business to the next level. Mm-hmm. So yeah, Andrea, this was just for me eye-opening. I think I know that we wanted to talk about retirement, selling the business. Is there anything else that you think is, as we start wrapping up this discussion that folks need to know, about Cash Flow CFO, about, considering a service like this for their business?
Sure. I think one thing that's very, very important is that you look for a service. When you talk to a fractional CFO, you want somebody that has a proven process that they're going to take you through rather than just saying, okay, what would you like me to do? You mentioned that, Jean, you've got blind spots. You don't know what you don't know. And that's why you've hired this expert in that role. And so having someone that can lead you through the process of, number one, the first thing you want to do is make your business as profitable as possible, your business model. And once you get to that point, then go out and start growing, but first let's look at what you have. Let's make it as profitable as possible. And set that financial foundation as strong as possible so that when you go out and take these big leaps of revenue growth, you're able to manage it and it's, it's an enjoyable process. And the other thing is find a CFO that has a growth mindset. There's a lot of financial professionals that are risk adverse, and that doesn't necessarily need to equate to, scaring you, and into, don't do that. It's not, I don't think that's a good idea. No, we always say to our clients, we never tell them no. We always say, sure, let me show you how we can do that. Then when we break it down into those steps, then they might look at it and go, yeah, I don't want to work that hard. Or no, that doesn't make sense for, the involvement I want to have, whatever it may be. Perfect. Let's rework the plan. Let's rework the outcome. But we're always saying, sure, here's how what it's going to take to get what you want to have happen in the business. So growth mindset, abundance mindset, all of those things are super important for who you surround yourself with in your business when you're on this path to growing it and scaling it. And the third thing is make sure you do your due diligence. When you're looking at a CFO firm, make sure you're, talking to their clients, you're doing reference checks, you're looking at how long have they been in the business, what are the certifications of the CFO team. I don't recommend going with just a one-off person, because what if, they get sick and they can't come in or something. Having we all know we're service providers here. Having that backup, having that cross-trained person is super important. And just do the financially sound things. Have SOPs in place, have a management dashboard, have KPIs, have all of these things that are going to release the stress off of you, the business owner, so that you can continue to go out there and confidently and enjoyably, make those new big strategic relationships that are going to bring in these big contracts. And that's the fun stuff, right? That's the enjoyment that business owners get. And a lot of times they try and wear too many hats, and it just slows them down, and it sucks all the fun out of running and growing a business.
I agree 100%. And I just feel empowered, working with someone like yourself. I know I've learned so much from you. And I think, just the freedom of kind of being able to look at, my business from, wow, I don't have to be stuck where I am. Here are my options. I can grow, I can potentially sell, but just having a partner to look at, I think was critical. And so I just want to kind of wrap this up today by saying a couple of things. Number one, Andrea Jenson and her team are part of our inner circle. One of the things that I want to be intentional about as in the work that I do is helping people make connections. Because all too often, I find like, oh, people find out about stuff and then you just see them kind of take off, but there's no information about how they got there or what their strategies are. And so Andrea and I consider her a partner, and again, part of our inner circle. And so we want to continue with this framework of Masterclass in order to give you guys exposure to our inner circle. Andrea and I are running in the same circles, and there's just so much to unpack. So I hope that you will continue to engage with us. Andrea, how do people get in touch? What should they be thinking of in terms of next steps if they're interested in having a conversation with you or a member of your team?
Yes, absolutely. So our website is thecashflowcfo.com. And you can download some great resources there. You can book a call to talk to me personally. You can email me at andrea@thecashflowcfo.com. And we are going to be having a workshop that is going to cover a lot of the content that we talked about today. So you can find out more about that. Let's get on a call, see if it's a good fit for you and what your goals are with your business. And we'd be happy to help you implement a lot of the things we talked about today. Implement those in your business, get some of these foundational pieces in place so that you can confidently keep moving forward with your growth goals, and just know that you've got, all the financial readiness resources in place for your business.
Awesome. And certainly you all know me, so you can reach out to myself or my team with any additional questions. We hope to, again, continue with this Masterclass series, so you'll be getting some updates from us in the very near future. So Andrea, thank you again. This was a pleasure, and I loved this conversation. I hope that everybody that's watching gets a lot out of it, and I look forward to us continuing this conversation. I think there's a lot, we talked at so many high level concepts today. I think we could dive into any one of those topics and have a full session on those.
Absolutely.
All right. Well, listen, thank you. I really appreciate you joining us today, your time. We learned a lot, and I thank you.
Oh, you're welcome. It was a pleasure. Thank you.
Thank you for listening. Don't forget to like and review, and we'll catch you on the next episode. If you're looking for more content or resources in the meantime, check out our website for information, blogs, and our I've Got a Spreadsheet for That series. That's thecashflowcfo.com. Again, thecashflowcfo.com. We can't wait to hear from you.